Hey everyone, and welcome back to Business Mindset. The coronavirus pandemic threw a wrench into just about everyone's plans. Vacations were cancelled, lesson plans were turned upside down, and millions of Americans were suddenly out of a job. If you're planning to buy a house soon, you might be questioning whether you should put that idea on pause too. Today, we're going to be talking about the crisis of mortgage in 2021. Make sure you stay into number one, as you don't want to miss this unique topic, crisis of mortgage in 2021. Let's get started. COVID-19 has created special circumstances for home buyers. With numerous industries shuttered due to quarantine, the economic uncertainty caused by the pandemic forced many people to put their home buying plans on hold. On the other hand, mortgage rates are at rock bottom. Plus, many home builders and developers are enticing buyers with special deals, such as discounted prices, waived closing costs, appliance upgrades, mortgage modifications, just to name a few. Those in the market for a new home have a unique opportunity to take advantage of these opportunities during this time. If you're fortunate enough to still be in a position to buy a home, here's what you should know about buying during the COVID-19 crisis and how you can potentially get the best deal. The coronavirus pandemic threw a wrench into just about everyone's plans. Vacations were cancelled, lesson plans were turned upside down, and millions of Americans were suddenly out of a job. If you are planning to buy a house soon, you might be questioning whether you should put that idea on pause too. COVID-19 has created special circumstances for home buyers. With numerous industries shuttered due to the quarantine, the economic uncertainty caused by the pandemic forced many people to put their buying holds on hold. On the other hand, mortgage rates are at rock bottom. Plus, many home builders and developers are enticing buyers with special deals, such as discounted prices, waived closing costs, appliance upgrades, mortgage modifications, just to name a few. Those in the market for a new home have a unique opportunity to take advantage of those opportunities during this time. If you're fortunate enough to still be in a position to buy a home, here's what you should know about buying during the COVID-19 crisis and how you can potentially get the best deal ever. Despite relatively steady home price appreciation in May, the US housing market is on the precipice of an extended price stump. The Housing Data Provided May Home Price Index and HPI forecast report predict a year-over-year income price decrease of 6.6% by May 2021. The forecast comes on the heels of a host of relatively positive housing data that found demand picking up after its initial coronavirus-induced decline in early spring. According to the CoreLogic report, home prices in May 2020 grew 4.8% from the same month in 2019 and 0.7% from April 2019, greater than 0.3% month-over-month increase CoreLogic predicted in April. While robust demand and a tight supply of homes for sale have kept prices up through the crisis, the anticipated impacts of the recession are beginning to appear across the housing market, CoreLogic said in a press release. The company's May forecast predicts a month-over-month price decrease of 0.1% in June and a year-over-year decrease of 6.6% by May 2021. Pent-up buyer demand was delayed from spring to summer and is reflected in the latest price data, but with elevated unemployment, purchase activity and home prices could fall off after summer. Should prices decline 6.6% between May 2020 and May 2021, it would be the most significant year-over-year price drop since September 2009, when home prices declined 7.6% from the year prior. By the end of summer, buying will slacken, and it's expected home prices will show declines in metro areas that have been especially hard hit by the recession. While all states are expected to experience a price decline, Arizona and Florida face a perfect storm of elevated COVID-19 cases and the subsequent collapse of the spring and summer tourism market. While harder hit areas may also experience a slower rebound, the preservation of factors like low mortgage interest rates and a shortage of for-sale supply have already supported prices in some metros and may also encourage home price stabilization nationwide. According to the recent report, the markets most at risk of decline in home prices are Prescott, Arizona, Lake Havasu, City Kingman, Arizona, Naples, Immokalee, Marco Island, Florida, Crestview, Fort Walton Beach Destination, Florida, and Daphne Fairhope Foley, Alaska. A Mortgage Bankers Association index that measures the weekly volume of applications for a loan to purchase a home has posted week-over-week decreases for 2 weeks in a row. However, the level remains more significant than in the same period in 2019. The weakening in activity is potentially a signal that pent-up demand is starting to wane and that low housing supply is limiting prospective buyer options. Joel Clan, the organization's Associate Vice President of Economic and Industry Forecasting, said at the time. Housing Market Predictions 2021. The housing market is in a tricky situation, giving massive unemployment, shelter in place, the coronavirus, and tremendous uncertainty. However, not all is lost, especially after a massive 44% month-over-month rebound in US pending home sales from May. Here are likely housing predictions for 2021. Overall, we believe the housing market will soften in 2020 and then reach new highs in the second half of 2021. Given the market prediction, we all can buy property at a discounted price between now and around July 1, 2021. After July 2021, it's expected nationwide housing prices to have fully recovered. Reasons for why the housing market will decline. Double-digit unemployment rate. Over 30 million Americans have filed for unemployment. As a result, the unemployment rate has skyrocketed to 15%. When people are unemployed, they aren't looking to buy homes. They're looking to protect what they have. Thankfully, millions of Americans have received enhanced unemployment benefits of $600 a week until July 31, 2020. Delinquency rate going higher. With the unemployment rate surging, the delinquency rate on auto loans, credit card loans, and mortgages are likely to rise by 75% to 3.5%. A higher delinquency rate means banks more hesitant to lend of Moss's amount. Tighter lending standards. Banks leaned on the lessons for 2008-2009 financial crisis and having tightened lending standards since then. However, banks are further tightening lending standards because they also are unsure when the economy will recover. If it's hard to get a mortgage, it's harder to buy a home. We've talked to several mortgage lenders in depth about the state of the mortgage industry, and they all say that getting a jumbo or super jumbo loan poses more difficulty. Banks require 20% or more outstanding down payments and 720 or higher credit scores for a jumbo loan. As for getting a comforting mortgage loan, it's still okay, as Fannie Mae and Freddie Mae are still buying because the government supports them. Open houses are not open yet. Once shelter in place began in mid to late March 2020, open houses were shut down. Even in July, open houses will be mostly by appointment only. When you can't get loads of people in the door, it's hard to trigger the emotional desire to buy. Without emotional buying, properties have a more challenging time getting into a bidding war. Looking at homes virtually is nice, but if you're going to spend hundreds of thousands of millions of dollars on your home, you want to go inside and feel the home's presence first. People want to hoard cash. When there is uncertainty, most people tend to hoard cash until all signs are unmistakable. Below is a massive spike in the US personal savings rate in April 2020 to 33%. Reasons for a housing price recovery in 2021. By July 1, 2021, it's expected nationwide housing prices to recover from a 5% decline to reach a new all-time high due to the following reasons. Mortgage rates will remain low. If housing prices decline by up to 5% over the next 12 months and mortgage rates continue to remain low, housing affordability goes up. When affordability goes up, more people will buy properties. Given the demand for US Treasury bonds is high in an uncertain environment, bond yields will remain low. There is also little to no inflation with so many people out of work. Everybody should at least refinance their mortgage now to save. Tremendous government support. The government is committed to doing everything it can to help the American public stay afloat during a global pandemic. As a result, we should expect more stimulus checks, extended enhanced unemployment benefits beyond July 31, easing PPP forgiveness rules, and massive government works initiatives to put Americans back to work. The increased desire to invest in a stable asset class. Unlike stocks, real estate values don't just go poof overnight. When the stock market is weak, there is a tendency for capital to flow towards real estate safety. The sweet spot for real estate is when stocks are down, 10% as currently is the case. Mortgage rates are low and stock money shifts to real estate. Real estate providers' shelter is a tangible asset, is a defensive asset, and can generate income. With a desire to relocate to less densely populated areas of your city or country, real estate's desire should continue to be quite strong. A surge in work from home trend. Now that tens of millions of people have experienced working from home for months, the trend is likely to continue forever. Working from home is much more efficient. As a result, productivity also increases. With more people staying at home, the value of a home goes up. Anytime you use something for a more extended time, you care more about that thing. People want to buy homes with views, more land for their children, and homes with home offices. People want to buy homes in less densely populated areas of their city or a different state. Therefore, expect to see more capital invested in real estate. Below is a picture of our house office located in the western side of San Francisco. We've always wanted to write while looking out into the ocean. The desire to get busy living now. If the global pandemic has taught us anything, it's that tomorrow is not guaranteed. Therefore, there will be a massive demand curve shift with renters looking to finally buy a nicer place. You will see frugal homeowners wanting to upgrade their living standards as well. Billions of more people decide whether it's best to keep hoarding cash or spend their cash on a better lifestyle. Do you want to live like a pauper for the next several years, waiting for a vaccine that may never come? After locking down expenses and saving so much during shelter in place, we're personally looking to spending our money. Pent-up savings. Like how massive increase in personal saving rate may be throttling house demand, the savings will eventually be unleashed onto the world. Take a look at the latest US personal savings rate for May 2020. It's still too high at 23.2%. However, it has come down from 33% in April as US consumer gets more comfortable spending again. If there is a vaccine for COVID-19 by the end of 2020 or early 2021, we could see a robust recovery in consumer spending. The vaccine will allow government to open up more businesses and get millions of Americans working again. While you are here, go ahead and click on one of these two videos on your screen. See you there.